A non-fungible token, or NFT, is a type of cryptographic token representing a unique asset. NFTs are tokenized certificates of digital or real-world assets. They function as verifiable proofs of authenticity and ownership using a blockchain network. NFTs are non-fungible, which means they are not interchangeable with each other. Such a feature introduces scarcity to the digital world. On the other hand, all fiat currencies and most cryptocurrencies like Bitcoin and Ether are fungible. Being fungible means an asset's individual units are interchangeable and indistinguishable from each other, making them perfect as a medium of exchange. Why did people create NFTs? When the world became increasingly digital, people were able to make copies of digital goods easily, such as pirated movies or copied software. Centralized systems were created to reduce those illegal activities. Today, it's extremely hard to download music and movies illegally online, but it remains incredibly easy to make digital copies of many things, and it's hard to prove ownership of digital goods. NFTs allow digital goods to have verifiable scarcity and provable ownership based on blockchain technology. Unlike cryptocurrencies, NFTs are individually unique and are therefore a great solution for representing ownership of unique assets. That's why NFTs are often referred to as crypto collectibles. While it's still possible to copy digital goods, NFTs make it very easy to determine whether someone selling or distributing a copy of a digital asset is its real owner. NFTs are primarily used to represent ownership of digital items, although they can also certify ownership of physical items in the real world. Similar to cryptocurrencies, NFTs can be traded in open marketplaces, but it's worth noting that the value of each NFT is unique. Both cryptocurrencies and NFT prices are volatile, so be cautious if you invest in them. NFTs have the potential to be one of the critical components of a blockchain-powered digital economy and Web3. They could be used in many different fields, such as video games, digital identity, licensing, ticketing, membership, certificates, fine art, and fractional ownership of assets. NFTs can be used by dApps to issue unique digital items and crypto collectibles. As unique collectibles, these tokens have a resale value on the market, and the NFT market has been growing rapidly in trading volume despite being volatile, like the overall crypto market. Another benefit of NFTs is that they could mitigate some common problems faced by many online gaming ecosystems. Some online games have already built sizable gaming economies. Using blockchain to tokenize gaming assets is a solution to alleviate challenges, such as management of gaming economies and proof of ownership. Depending on the blockchain they are minted on, NFTs could also allow players to take some of their in-game assets outside of the game ecosystem, allowing gaming worlds to connect to each other. While NFT usage in the virtual world is already flourishing, another exciting use case of NFTs is the tokenization of real-world assets. These NFTs can represent fractions or collections of real-world assets that can be stored and traded as tokens on a blockchain. This could introduce some well-needed liquidity to many markets that otherwise wouldn't have much liquidity, such as fine art, real estate, and rare collectible items. For example, a person may want to buy a piece of physical art to sell later, but lives on a different continent from where the artwork is currently stored. Instead of packing, moving, finding a new storage facility, and unpacking the artwork, an NFT certificate of ownership can be minted and transferred to the new owner, and along with it, the responsibility for paying for ongoing storage. Easy and trustless transfers of these assets could reduce friction in the global economy. Digital identity is another sector that can benefit from the properties of NFTs. Storing identification and ownership data on the blockchain would increase privacy and data integrity because blockchains are more secure than centralized databases. NFT virtual land on metaverse platforms is another promising use case. NFTs are perfect for representing virtual land ownership because each piece of land is unique. Landowners can use their plots to do many things, including hosting online events, displaying content, and advertising. NFT virtual land will likely continue to progress as we move closer to a metaverse future. If you want to create or mint your own NFT, it's a straightforward process. There are various standards to do this. The most prominent is ERC 721, a standard for issuing and trading non-fungible assets on the Ethereum blockchain. An improved standard is ERC 1155 on the Ethereum blockchain. It enables a single contract to contain both fungible and non-fungible tokens, opening up a new range of possibilities. Ethereum has traditionally been the home of NFTs and their development. It has a large user base and well-established NFT community, but transaction fees are very costly. There are a growing number of blockchain networks that you can use to mint NFTs, with some solving the problem of high transaction fees on the Ethereum network. You may wonder what gives NFTs their value? Why would someone be willing to pay money for a digital picture when you can just save the file from the internet? The value of an NFT works in a similar way to a piece of art. If you can prove that you own an original Picasso painting, then you can sell it for a lot of money or brag about your ownership. Anyone can make a copy of a Picasso painting because it's in the public domain, and if it's on display, anyone can look at it. But copies and viewing access do not diminish the value of a Picasso. Perhaps they even enhance it. The same goes for collectibles like rare baseball cards or collectible game cards. Proof of ownership and the rights that go along with that ownership are what NFTs represent. The most important thing you should remember about NFTs is their unique properties and potential use cases. It looks certain that NFTs are likely here to stay and become even more prevalent as we move closer to Web 3.
Now, let's look at what you have learned in this class. Answer this question in the comments, and if it's correct, we'll let you know with a like. Which of the following statements is / are correct? Choose all that apply. A. NFT are cryptographic token that represents a unique asset. B. NFT are crypto collectibles. C. NFT are not interchangeable with each other. D. NFT are individually unique. E. NFT can be used for tokenization of real-world assets.